I am going to share with you two stocks, two stocks with very high potential returns. First stock I'm going to share with you is Bajaj Finance. Bajaj Finance, as you can see, I have placed the chart in front of you. It is in consolidation for quite some time now, from January till now. It has been going up and down. It's in consolidation. Let's put a rectangle over this. We have put rectangle above this consolidation. It's a rectangular consolidation. Also, we can see that earnings is coming somewhere in 22nd October. So there is a high potential that the breakout might happen before 22nd October, and most likely the target can also be achieved by 22nd October before the earnings is declared. So based on our analysis and whatever we have learned in technical analysis in our webinars, what is the target? So to set the target, let's measure the width of rectangle. Width of rectangle, as we can see, is around 1186 points. We can say 1100. So to be on the conservative side, let's make it 1100 points roughly. Now we keep this 1100 points on the top of this rectangle, and let's see how far it goes. 1100 points takes it to roughly 8550. So we draw a horizontal line at 8550. Okay. So this is our target for this rectangle. What does it mean? Whenever within next 10 to 15 days, this week or next week, whenever the price closes above this rectangle convincingly, once it breaks out, then it will go to the same length of this rectangle. It is likely to go till 8550. Since earning is also coming, it is very close by. There is all possibility that by 22nd October, it is likely to reach there, or it may take some more time. So it's not a guarantee that it will go till 8550 by the earnings date, but it is likely that it may go up to that level. Now, within Bajaj Finance, if we zoom out, if we from daily, if we zoom out and we see a longer duration chart here, we find there is a consolidation happening on a longer duration. It's not only shorter duration, we can see there is a consolidation happening on a longer duration. If we change the chart from daily to weekly, we will see that a nice, beautiful triangle is forming over a weekly chart. So what I will do is, I will draw a triangle on this. So we'll draw a triangle. This we have drawn a triangle on a weekly chart. Now, as you can see, we have two consolidation patterns. First is this consolidation pattern happening on a daily basis daily chart, and then we have this triangle formation on weekly chart. Now, what may happen? It may One may lead to another thing. What may happen is, once the stock has broken this consolidation, this rectangular consolidation, it may reach 8550, Now in this process, it will also break this triangle formation, weekly triangle formation. And now we can set our weekly target from triangle, how far it is likely to go. So let's see how much is the width of the triangle, and then we can superimpose it above the triangle. So it's around 2830 points. Let's put this on the triangle. Now if we put a horizontal line, so it's coming around 1884. So this is the triangle's target. So now we have two-step target. So first step is for 15%. Second step is triangle target of 35% from this point to this point. If you want to take from the rectangle breakout till triangle target, we can measure it from here to here. Roughly 45% growth from this point onward is possible. Now it is very important that we understand the trigger has not yet come. The trigger will come once the price breaks this box. Once it breaks this box and starts moving up, then the trigger will come. Then all this chain of events may take place. It's not a guarantee, it's based on technical analysis. So every technical analysis, we have to understand it can succeed, it can fail also. So we have to prepare for failing also. So now we have set our target for success. This is this first success, 15% target. Second is our 45% target to 10,000 or 11,000 price range. Being a good technical analyst and a good trader, we have to set our stop losses. Stop loss, after it triggers out, we can take the stop loss as this line of this triangle. Anytime it closes below this line, so this line we have drawn, anytime it closes below this line, we should exit. Yes, we will be having losses, but that is how the technical analysis work. We have to be ready for the profit and we have to be ready for the loss. So we have to take in account in case it goes up, and after breakout of this rectangle, in case it starts falling and it closes below this line, this is the line of the triangle, if it closes below this line, then we should exit. Now I am going to share with you the next stock. In front of us is SBC. SBC has been forming a weekly consolidation. So as you can see, this is a weekly chart. SBC is forming a weekly consolidation here. So let's draw a triangle. Here we have a triangle above SBC. As we can see, it is consolidating within the triangle. And this week, because this is a weekly chart, we have to look at Friday closing. So this week, this closing has happened above the triangle and above the previous top. So we can say yes, this is a breakout as per the technical analysis of triangles. How far it might go? So we will measure the width of the triangle. This is the width of triangle. Let's put it at the breakout point. We'll put it here. The target for SBC is around 45 to 46, around 50% from here. So with the current level 35 to 46, 10 rupees is around 33%. So the current scenario, it is likely to go up. by up to 46 rupees, we can say. Now this is the target in profit. So we should always have a exit plan when we should exit in case this technical analysis fail, because as technical analyst we should be always ready for eventuality. If what if the uh, stock starts going out, at what point we have to exit, and we should be always ready to exit in loss if required. So if it starts moving down and closes below this line, so you all know by attending my webinars how to draw this line. So if it you can draw this line on your charts anytime. If it closes below this line, you should be exiting. This video is purely for education purpose. This is not at all a trading advice. This is based on my webinars, what I teach, consolidations and breakouts. Thank you so much for watching. Keep attending my programs. Keep watching my YouTube channel. And don't forget to subscribe my YouTube channel. Thanks a lot.